So the last section of Chapter 14.4, is on paying withholding and payroll taxes. So again, as I was saying, the employers must pay the federal, state, and local taxes that they withhold from their employees, as well as they have employer payroll taxes that they must pay to the government. So think, a business owner has to pay taxes to the government for anybody they employ. Some of that money comes out of their employees' earnings. Others, they have to come out of their earnings, plain and simple. Whatever they're making every month on selling their products, some of the money goes to pay their employees, some of the money goes to pay taxes, some of the money goes to improve their business, to pay for their family to eat and their bills at home, but everybody has to pay into these taxes. And, you see enough propaganda on the news and stuff of employers that don't pay their fair share, that seem to get away with it, and others that get caught not paying their fair share. So, it's out there. It's happening. So this is the actual document, the first document for Chapter 14. You can see this form is called an 8109. It's called the Federal Tax Deposit Coupon. So the government provides you with these forms and these slips, and then you have to, you're required by law to pay them. And they do catch up to you, just like they catch up to individuals that don't pay their taxes. They catch up to businesses that don't pay their taxes as well. So in this particular example, it is the month of December. You see the amount. You see the type of tax it was. 941 is probably coded. That is federal income tax. It is fourth quarter. That's the tax period that we're in right now in December. And you can see they're going to deposit this money into their federal account. So maybe they pay electronically, or maybe they write a check, but they include this slip of paper with it so that it gets recorded properly. Then the business actually has to record that transaction. And the transaction goes debits to the employee income tax, Social Security, and Medicare tax. Remember, when we recorded them as credits. We put them in as credits to hold into that account. Now we're debiting those to wipe them out as zero, because we're actually cutting the check to pay the government. So this is kind of like the closing transactions that we learned about previously, where you close out your expense accounts by crediting each of them, wiping them clean for a new period of time. This is like you're closing out, and the journal transaction reads like this. January 15th, we paid cash for liability for employee income tax. We paid cash for our income tax, $542. Social Security was $985 and Medicare $227 for a total of $1,754.82. That's how much the total was that got sent in taxes. Here's how the transaction looks in the journal. There are 3 debits: employee income tax, Social Security tax, Medicare tax, and then 1 credit to cash. Okay? Here is what the slip of paper looks like for federal unemployment tax. You can see different, this form was an 8109 federal tax. This one is another federal tax deposit, 8109. The amount of dollars are $8.40, but you can see they coded different tax here. 940 is unemployment. The 941 from before was federal income tax. And again, it's fourth quarter. These slips, remember, are given to the business, so they have these slips to deposit on a monthly basis. Next transaction is journalizing payment of your liability for the federal unemployment tax. So it would read this way: pay cash for unemployment tax liability for the quarter ended December 31st, $8.40. Remember, these are the employees that haven't yet made $7,000. So unemployment tax payable, which normally has a credit balance, is being debited for $8.40. Cash is credited for $8.40. You're writing a check. Remember, this is like you're closing out these payable accounts. By debiting it, you're closing it out. It'll now have a zero balance, and then you can start the new year fresh. So, transaction would read unemployment tax payable. It's a check. Credit to cash, debit to that tax. Next one is the state unemployment tax. Same type of thing, it's just state instead of federal. It's a check. There you have your debit to close out that account, and you have your credit to cash. All right, so that's it for chapter 14. I will now record the work together and on your own, so you can see a demonstration of how that's done.